Today, Bitcoin jumps as high as $71,000. Uniswap says the SEC is about to sue the DeFi platform, and Swan's Stephen Lubka explains how spot Bitcoin ETFs and the upcoming halving are driving Bitcoin's price action. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Crypto prices in the green today despite hot inflation data released yesterday, which pushed the market's expectations for rate cuts to September. As of noon Eastern, Bitcoin traded just under $70,000, although the cryptocurrency rose as high as $71,000 overnight. Ether rose slightly to the $3,500 level, and Solana jumped more than 3% to $173. Okay, let's talk about the top stories. DeFi platform Uniswap says it received a Wells notice from the SEC. In a blog post yesterday, Uniswap said the U.S. regulator had sent a letter warning of an impending lawsuit. A Wells notice gives the recipient of the letter a chance to respond and explain why legal action is unwarranted. That's called a Wells submission. Uniswap said in the post that its legal team was taking on the fight with the regulator, and in the meantime, all of its products would continue to be available. Uniswap said it doesn't operate an unregistered exchange and that its token is not a security. It also pointed to the SEC's partial loss in court in its lawsuit against Ripple, along with its ongoing legal battle against Coinbase, as evidence that the agency doesn't have jurisdiction over the platform. Now, we reached out to the SEC, and the agency said it doesn't comment on the existence or non-existence of a possible investigation. Next, we're starting to get a clearer picture of how much money Wall Street's biggest players are spending on spot Bitcoin ETFs. By law, asset managers with more than $100 million under management are required to disclose their holdings once a quarter. Those first filings since the launch of spot Bitcoin ETFs back in January are now hitting the SEC's website. Among those who disclosed their holdings, Park Avenue Securities, a New York-based firm with nearly $10 billion in assets under management. Park Avenue held more than $450,000 in the Grayscale Bitcoin Trust at the end of last quarter. Now, these filings are just starting to trickle in. We're awaiting 13Fs from some of Wall Street's biggest names, which could come as late as mid-May. All right, for our main story, I spoke with Stephen Lubka, Swan Bitcoin's managing director and head of private clients, about adoption of those ETFs, how inflation and interest rate expectations are affecting crypto markets, and that Wells notice Uniswap received. So Wall Street institutions like Park Avenue Securities bought into spot Bitcoin ETFs in the first quarter. That's according to SEC 13F filings released this week. And of course, those products just launched here in the U.S. in January. Now, you run the private wealth team at a brokerage firm that serves high net worth investors. So I'm wondering, are you also seeing demand from your clients for these new products?
Yeah, so it's been record months, like literal all-time records for us over the last quarter. Best quarter, best month, multiple best months. So we've seen a huge uptick in demand from high net worth investors, family offices, like small and medium businesses, and a lot of retirement asset demand, which is interesting because that's for, we sell spot Bitcoin, the actual coins rather than like ETF shares. And a lot of demand from retirement investors for the actual coins, even though they now could buy the ETF. So it's been a record few months. We've been very busy, but it's a great problem to have in this industry. You build for a long time waiting for moments like that.
So Bitcoin was trading back above $70,000 this morning, brushing off inflation data released yesterday, which showed consumer prices rose more than expected last month. The sign of lingering inflation pushed the market's expectations for rate cuts back to September, which could be bad news, of course, for crypto. So why do you think Bitcoin was trading higher, even with the hot inflation data in the mix? How do you explain that?
Yeah, so, there's a few angles there. I'll touch on a few points. One is that I think what the market is waking up to. So let's say business as usual, the last 20, 30 years, rates go down, stocks go up, rates go up, stocks go down. That's the common perception. But markets are actually operating a little differently, right? We've had very high rates relative to the last decade, and the stock market's been on a tear for the last year. Now, why is that? The reason is because the debt, the federal deficit, the debt is so high. Whenever rates go up, it increases the interest payments on that debt. What are those interest payments except dollars, which are being created from thin air to pay holders of treasury bonds? So actually, as interest rates rise, it's another form of money printing. It's another form of an inflationary force. And that's why I don't envy the position Jerome Powell finds himself in, because if he raises rates, that's inflationary. And if he lowers rates, that's also inflationary. And I think the market has been a little slow in parts to fully internalize this new reality. But either path the Fed takes is going to result in more dollars being issued into financial markets, which improves liquidity and drives up asset prices. So I think in part, like Bitcoin and the market is realizing that. And the other story is that I think Bitcoin is just specifically in a very strong position relative to other assets. Like I said, this ETF wave is far from done. Demand is high. People want to own this asset. The flows are supporting it. So even if you saw some contraction in the S&P and in equities, you could see Bitcoin continue to do very well. That wouldn't surprise me at all.
And of course, the widely anticipated Bitcoin halving is expected to happen next week. The key technical event has historically set the stage for Bitcoin's next bull cycle, as the halving cuts the number of new Bitcoin entering the network each day, which means tighter supply. What do you expect will happen to price post-halving this time around?
Yeah, so I think it's important to understand that what the halving does is it reduces the amount of Bitcoin which is being paid to miners by about 450 Bitcoin per day. That's equivalent at current prices to around $30 million that miners don't have to sell to cover costs. So you can think of it as a $30 million a day at current prices reduction in sell pressure. That's obviously bullish for price. Now, is anything going to happen the day of the halving? Because of this supply reduction, I don't think so. Like, not mechanically. Maybe traders decide to trade it and the price goes up or down or whatever. But over the next 2 or 3 months or 4 months or 5 months, I think you start to see the price impact of that supply reduction start to boost price. And you combine that with the ETF inflows, you've got a great setup there. I'm personally quite bullish on Bitcoin's price performance for this year. I think we end the year a lot higher. And I think the ETF combined with the halving is a large part of that story.
Now, before I let you go, I have to ask you about the latest development with Uniswap. The DeFi platform announced in a blog post yesterday that the SEC had sent a letter warning of an impending lawsuit. So more enforcement action against a crypto company is expected here in the U.S. What do you make of this latest development, and what does it signal to the industry?
I would say that if you have a centralized pressure point, it will get pressed on. So the challenge that Uniswap faces is they're an incorporated corporation operating out of New York City with a CEO and, shareholders and an equity structure. They're a company. And even if the protocol, the actual kind of protocol itself is separate from that company in some ways, there's somebody to sue. And the SEC is putting pressure there. Will they win? Will they not win? I mean, if I'm being honest, they haven't had the best track record in the last 2 years. They haven't really won too many things. So, maybe they're unsuccessful here as well. But I think it just highlights the unique properties of Bitcoin, and that, there really is no centralized pressure point for Bitcoin. There's no one to sue. There's no CEO. There's no equity structure. And that's part of the reason Bitcoin got a spot ETF, is even the SEC wasn't able and didn't want to say it was a security. So if I'm an investor and I'm looking at this, I think there are further difficulties ahead for some of these crypto projects that are in the US and can easily be targeted. And I think it speaks to the value of Bitcoin.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.